They said this weekend would be the final straw, that the grand fortress of cryptocurrency would crumble under the weight of global tensions. Yet, when Bitcoin slipped below $99,000 on a seemingly ordinary Saturday, the move was anything but ordinary. Observers gasped with disbelief as headlines blared instant doomsday predictions. Economic uncertainty, rising volatility, and echoes of panic resonated throughout every crypto forum. But guess what? Suddenly, within mere hours, it rebounded above $100,000, as though the initial drop had never even happened. Welcome to our deep dive into one of the most puzzling and exciting corners of modern finance, Bitcoin's identity crisis. Today we uncover the real drama behind that dramatic plunge and miraculous rebound. Could it be a reflection of the market's unwavering confidence in a digital future, or just another instance of unpredictable speculation? In this episode, we'll explore exactly how global events might influence Bitcoin's short-term gyrations, why large-scale investors seem ready to pounce at every dip, and what the broader public can learn from this roller coaster ride. In this story, we'll look at 4 key elements shaping Bitcoin's unpredictable path. First, the powerful tug-of-war between panic selling and opportunistic buying that appears at the first sign of trouble. Second, the link between cryptocurrency movements and the global political climate, particularly those tensions festering in the Middle East, which are rattling worldwide markets. Third, the underlying psychology behind Bitcoin's status as both a risky investment and a potential hedge. And finally, we'll examine how institutional players might be fueling this unstoppable growth story, even at a time when many small-scale investors remain hesitant. So, how did we get here? Think about it. Only a few years ago, Bitcoin was a fringe curiosity, a digital toy for tech enthusiasts and a handful of adventurous speculators. Yet now, in the year 2023, entire industries are analyzing its every zigzag. Financial gurus once dismissed it as a passing craze, but after repeated cycles of boom and bust, Bitcoin continues to defy predictions. The market watchers who declared it irrelevant when it soared past $10,000 years back now have to explain its rapid maneuvers around the $100,000 mark. Clearly, something much bigger is unfolding. That brings us to this weekend's fascinating spectacle. If you just read the headlines, you might believe the entire crypto ecosystem was on the brink of collapse when Bitcoin dipped below $99,000. After all, international news was dominated by grim updates from the Middle East. Typically, in times of conflict, investors flock to safer harbors. So, many expected Bitcoin to behave like a stable commodity or digital gold, a place to store value when everything else seems uncertain. Yet, as we witnessed, reality paints a much different picture. Instead of providing a gentle shield from panic, Bitcoin dropped, a swift, forceful reaction that baffled those who thought it had outgrown such volatility. The next big twist, the immediate bounce back. Within hours, the price soared back above $100,000. Analysts scrambled to interpret this rapid turnaround. Was it a short squeeze with traders forced to buy back positions? Or was it an orchestrated move by well-capitalized institutions seizing an irresistible bargain? Regardless of the cause, the rebound was enough to make cynics pause. After all, typical assets don't usually recover from a sharp drop that quickly, especially not in the midst of global uncertainty. Bitcoin's distinctive personality struck again: unpredictable, volatile, and strangely resilient. Here's where the story gets even more intriguing. Behind the scenes, large players have been waiting for an entry point. No longer is Bitcoin the exclusive playground of retail dreamers. Institutional investors, from hedge funds to multi-billion-dollar asset managers, have recognized the potential upside. Some see it as a form of digital store of value. Others treat it as a high-risk, high-reward position. Regardless, it's clear they're paying attention. When the price dipped below that symbolic threshold of $99,000, buy orders flooded in. The strength of that demand suggests a new floor has been arguably set, though no one can say for certain how stable it is. Of course, it's easy to label Bitcoin as some magic solution, an investment that no crisis can truly derail, but we should be careful. The market's wild oscillations hint at deeper uncertainties. Bitcoin can, on one day, look like a safe haven, while on the next, it behaves like a gambler's fantasy. And that's exactly why we're dedicating this deep exploration to the duality of Bitcoin in times of political strife. We'll peel back the layers of hype and see what really shapes this digital behemoth's fate. If you find this kind of investigative look at the crypto world compelling, show some love with a like. Your support helps us unravel more hidden truths in future episodes. Now, let's talk about the immediate aftermath of the weekend's drama. Traditional investors might be puzzled by how quickly Bitcoin recovers from a downward spike. In established markets like equities, precious metals, or even certain commodities, a steep plunge usually triggers cascading psychological effects. People start panic selling, fear spreads, and it often takes days or even weeks for confidence to rebuild. But Bitcoin's timeline operates differently. One plausible explanation is the strong presence of continuously engaged participants. Crypto trading never sleeps, so any rapid wave of fear can be overtaken by an equally swift wave of bargain hunters. This phenomenon is exactly what we saw, a near-instant wave of buyers stepping in to scoop up cheaper coins. The correlation with Middle East tensions might have triggered the initial sell-off, as risk-averse participants scrambled to reduce exposure. However, others recognized an opportunity. They understood that while Bitcoin's short-term movements can imitate riskier assets, its long-term promise remains captivating. The faster the sell-off, the more attractive the discounted entry seems to those convinced of Bitcoin's eventual growth. Thus, a self-correcting mechanism kicked in, pulling the price back up with surprising speed. Of course, speculation alone doesn't paint the full picture. Behind the scenes, the narrative around digital currency has evolved. Several years ago, it was mostly small-scale enthusiasts who believed in the disruptive potential of blockchain transactions. Now, major institutions are championing cryptocurrency funds, offering exposure to clients who used to be entirely traditional in their portfolio choices. A portion of this interest stems from a fear of missing out. How many times have we witnessed Bitcoin outrun every doubter, forging new price ceilings amid global upheaval? The unstoppable march of technology, combined with arguments highlighting decentralization, continues to win new converts. And yet, the confusion lingers. Is Bitcoin truly digital gold, a safe haven asset that thrives when the world is in turmoil? The events of this weekend suggest that it's not so simple. When geopolitical tensions spike, there's often an immediate knee-jerk reaction across all risky instruments, and Bitcoin, still widely considered speculative, feels the impact. Traditional gold, on the other hand, usually experiences a surge. So, where does that leave Bitcoin's identity? Maybe the truth is that it's simultaneously an ultra-speculative bet and a future store of value. That paradox is precisely what leaves experts scratching their heads. One of the most compelling ideas circulating in crypto circles is that Bitcoin will gradually shift from being a volatile speculation to becoming a recognized hedge against inflation and geopolitical disruption. But such a transition doesn't happen overnight. The market has to trust Bitcoin in times of crisis, and trust is built slowly. Every dip that doesn't end in absolute disaster, every bounce that reaffirms a certain price level, and every wave of institutional interest all contribute to forging a deeper acceptance. The roller coaster transitions from jarring ride to something that feels more predictable. Still, if you ask critics, they might say the hype around institutional interest is overblown. After all, big money flows in and out at the drop of a hat. If a global conflict intensifies and traditional markets tank, where will Bitcoin stand? Will those massive investors keep believing in a digital future, or will they run for the exits in search of safer ground? The paradox is that no matter the outcome, volatility is practically guaranteed. And that's exactly what gives Bitcoin its unstoppable marketing engine, the perpetual promise of thrilling outcomes, whether they're meteoric gains or catastrophic collapses. Lurking behind all this is a fascinating shift in the narrative. Not long ago, the mainstream press labeled Bitcoin a bubble that would burst any day. Now, headlines speak of it dropping below $99,000 as though it's a sign of apocalypse, implying that Bitcoin's rightful place is somehow above $100,000. We might pause to appreciate how far we've come. This shift in perception, from thinking that even $10,000 was unimaginable to treating six-figure territory as normal, reflects years of evolving sentiment, and it sets the stage for the next chapter in Bitcoin's puzzling journey. So, where does that leave us? If you're here, you're likely curious whether Bitcoin is truly forging a new path or whether it's just another product of hype. The truth, as usual, sits somewhere in the middle. But one fact stands out from this weekend's saga. In times of global tension, Bitcoin can fall dramatically and yet bounce back just as fast, suggesting a level of underlying demand that's impossible to ignore. If that revelation excites you as much as it fascinates us, consider subscribing to stay updated on our next deep dive. We have plenty more to uncover in the evolving terrain of digital assets and the mysteries they bring. To understand the significance of that quick rebound, we have to look beyond simple fear and greed. Many longtime Bitcoin enthusiasts argue that the technology behind the coin, its decentralized structure, resistance to censorship, and scarcity enforced by mathematics, remains fundamental. These enthusiasts see every dip as a fleeting discount, not an existential crisis. In their eyes, political unrest in the Middle East or anywhere else only strengthens the argument for a global, borderless currency that isn't controlled by any single authority. But bridging the gap between that idealistic vision and the choppy seas of daily trading remains a daunting challenge. Consider the ecosystem that's grown around Bitcoin. Exchanges operate around the clock. Liquidity is accessible from nearly every corner of the world, and countless media outlets scrutinize every momentary shift in price. This hyper-connected environment amplifies both panic and euphoria. When fear creeps in, it spreads instantly, pushing prices downward in a flurry of red candles. Conversely, once the negativity subsides, the bullish sentiment can re-emerge with shocking momentum. This feedback loop explains the knee-jerk drop and rebound in a matter of days, sometimes even hours, leaving both novices and seasoned traders in awe. Yet, even with this weekend's wild ride, it's vital to remember that Bitcoin is still an emerging asset class. Its identity remains in flux, toggling between a renegade alternative to fiat currency and an exciting new playground for institutional speculators. The market itself can't decide whether Bitcoin is purely a risk asset, deserving the same lumps as tech stocks, or a protective shield against political turmoil. In essence, it tries to play both roles at once, creating a tangle that confounds analysts who prefer neat comparisons to gold or other traditional hedges. All the while, the debate rages on about its future regulation. Governments are starting to keep a closer eye on cryptocurrencies, drafting laws that could shape their adoption for years to come. Will tighter regulation diminish Bitcoin's appeal as a hedge against chaos? Or will clear rules of engagement encourage mainstream trust to grow? The question looms large, especially when entire nations weigh the pros and cons of adopting or banning cryptocurrencies. Amid these swirling uncertainties, Bitcoin's price moves remain a canvas upon which traders project their hopes, fears, and big ambitions. So, what about the next crisis? If tensions in the Middle East escalate, or if another unforeseen global event shakes the markets, will Bitcoin respond with yet another dramatic tumble? Probably, if history is any guide. But the precedent also says that any significant dip tends to be met with a wave of opportunistic buys. It's almost as if a portion of the investing world believes wholeheartedly, no matter how hard Bitcoin falls, it will rise again. That unwavering conviction, along with the robust technology behind it, has led some to warn that ignoring Bitcoin could be riskier than investing in it. To put it another way, each crisis unfolds like a chapter in Bitcoin's epic saga. Once it seemed improbable that cryptocurrencies could garner any respect from mainstream finance. Now, entire committees debate their place in the global economic puzzle. The next grand event, be it political, economic, or social, will surely test Bitcoin's mettle again. But each test also cements its core supporters, those who see dips as fleeting storms. With every rebound, confidence inches higher, shaping the digital coin's identity as a remarkable, if still unpredictable, phenomenon. Even the skeptics can't deny the coin's capacity to shock and surprise. And surprise is precisely what we witnessed this weekend. The sudden breach of $99,000 sent shockwaves across social media. Some predicted a doomsday scenario, claiming that once the triple-digit barrier was lost, the entire crypto market would collapse. But the panic lasted mere hours. Before fear could fully take root, the momentum flipped. Traders and investors old and new realized that the deeper the discount, the stronger the potential upside. That pivot from fear to opportunism underscores one of Bitcoin's core attributes. It can tempt the adventurous while leaving the cautious shaking their heads. In a way, this unpredictability is also Bitcoin's lifeblood. It thrives in an environment where every outcome is possible, drawing in fresh excitement with each shift. Traditional markets have volatility, of course, but rarely do they combine raw speculation with philosophical ideals about decentralization and freedom. Bitcoin's drama stems not only from price, but from an ever-present push and pull between what it is today and what it could become tomorrow. And that future may include a reality where conflicts around the globe lead to more people turning to assets not controlled by governments, seeking a semblance of control over their financial destiny. Ultimately, the lesson from Bitcoin's weekend dip and subsequent rebound is that it remains a formidable contender, not just a passing fad. Yes, it's inconsistent, at times comically volatile, and prone to fueling both mania and despair. Yet even in a moment of global stress, a critical mass of investors stood ready to buy the dip, suggesting that a powerful undercurrent of belief endures. Whether you're a staunch skeptic or a cautious believer, one thing is certain: Bitcoin is far from finished. Its identity is still unfolding, shaped by every crisis, every rally, and every debate about its rightful place in a rapidly shifting financial landscape. One might argue that the real takeaway from this entire episode is not centered on charts or price points, but on confidence. At the very heart of each transaction lies a belief, sometimes rational, sometimes purely emotional, that Bitcoin can endure crises and emerge stronger. This faith can border on fanaticism, and it may cause skeptics to roll their eyes, but it also forms the foundation of every thriving market. Whether or not Bitcoin has truly earned such trust is a matter for heated debate. Yet, the fact that so many people rushed to buy during a period of heightened geopolitical tension speaks volumes about how perceptions have changed since Bitcoin's early days. As we wrap up, imagine this scenario. A dark cloud of uncertainty sweeps across global markets. Stocks tumble, commodities falter, and investors cling to safe havens. Bitcoin, at first, plunges in unison with everything else, reinforcing the narrative that it, too, is just another risk-laden asset. But then, as if sparked by a collective epiphany, a wave of buyers steps in, snapping up Bitcoin when its price looks enticingly low. Suddenly, we're back above $100,000. The doubters are momentarily silent, and the story continues. That cyclical dance, fueled by fervor and fear, reveals an asset that is still in its adolescence, capable of abrupt mistakes, but also astonishing recoveries that keep the world's attention riveted. This weekend's dip wasn't a meltdown. It was a masterclass in resilience, reminding us that for all its mysteries, Bitcoin remains a thrilling force to be reckoned with, even in the face of global upheaval.